All right, recorders on. Today is Tuesday, Valentine's Day. Happy Valentine's Day to everybody. Hello, JC. Jay Clark, how are you? Murrah, how's it going? Okay, so wow, let's bring the spy up here. Well, you know what? First, let's do this dark chart, and again, welcome everybody. Thank you for being here. Please ask whatever you'd like to ask. If you have charts, we'll look at charts in just a little bit. And, if you could do me a favor when you post a chart out tonight, if you could put long or short on it, it's very helpful sometimes to know kind of where you're coming from. That would be great. I would sure appreciate it. This is what I call the dark chart. And hey, Gary, Malcolm, how are you? Deborah, how's it going? Man, that's a tough one for me to pronounce. I think I'm not sure. I'm gonna. Hello, hello. Hey, Phil. Okay, so I think it's kind of important to let's do this right here. There we go. Let me get my right tool that I need. Let's see, we'll just use this tool right here. There we go. I think it's important for a trader to trade within a circle. That circle is whatever you want it to be. For instance, I'm pretty vocal about I like trading stocks that pop up a little bit, or they're on a rise and then they pull back, and I'm looking for that little bit of a buy signal in there. So it's just a trend and a pullback. I'm pretty vocal about that. So within that, I actually think a lot of people do that. There's no big super science behind it. But something else I also trade with, now I'm going to move down here, and I'm pretty vocal about this as well, is establish a trend. Your circle's been chasing your tail. Okay, that's kind of funny. Yeah. 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 So, I'm sorry, that one caught me off guard. Okay. So, a trend is another important thing. A trend is seriously important. And I use a moving average for that. I think a lot of people here know that. And these dots here, that's just the 17 exponential move average. So there's, one more thing I have in my circle that I look for. Price action, candlesticks, there's another thing there. And whatever you might use. Now, I'm not too hip on indicators. I do use one indicator called T2123. So there's 4 things in my circle. Probably should have done this by numbers now that I think about it. And sometimes when we're trading, and especially if we have a bad day or 2 bad days, 3 bad days, or bad weeks maybe, what happens is we start adventuring out of our circle. Because what we're doing is not working. So we start venturing out here a little bit. Maybe we get out here a little bit. And, that's exactly what Julie said there. Okay? Julie said, my circle has been chasing my tail. Now, I'm not sure if I doubt that's exactly what she meant. But it's this kind of thing right here. If you have a couple of days or weeks that it's not working, what you do, we jump out here and we start doing other things. Yeah, I didn't think this was it, but the circles made me think of it. Well, what happens is we spent all this time learning and focusing and our rules and everything in one area in this circle, this box, kind of like a suitcase. You know, in your suitcase, what do you have? We're gonna go to wherever, and in my suitcase, what have I packed, right? Well, it's all the stuff that you're comfortable with. But there are those times when they just don't work. It's just not, it's like, what am I doing wrong? So what we do is, like I say, we step out of our circle. I happen to think that's probably the worst thing anybody could ever do. If you have a set of rules, if you have something like this, this is something I use here, and I'm all the time kind of tweaking it, and sometimes I get redundant on it, and I trim it down a little bit. But this is on my desktop all the time. I mean, like 100% of the time. My computer turns on, this pops up automatically. And it just, it keeps me in my circle is what it does. It keeps me in my suitcase where I'm comfortable. And if there are days or even weeks where you can't find a trade no matter what you do, or you make money, and then all of a sudden you lose money, and before you know it, a week is gone by, 2 weeks, 3 weeks, a month, and you've got nothing to show for it. You may not have lost money overall in a month, but to trade for a month and have $5 at the end of the month, why am I doing this? And it's like I said, we step out of our comfort zone. Sometimes the market is just not right, okay? Just not right. Can somebody let Bill know, if you refresh? Thanks, Malcolm. Yeah, a checklist, Carol, exactly like this. And I mean, I don't do this right here. I don't come over here and say, yes, it's a 3/8 strap. Yes, the trend indicator is green, and yes, I have a second rising moving average. I don't make those check marks. I don't do that. But it's there so I can make sure that everything is the way I want it. And if I start getting off in left field, I can look at this and say, okay, where did that come from that I was trying to do? So this was a long way for me to get to have a trend. Now, I'm not much of a line drawer. I mean, and it's not that I don't draw trend lines. I do. I just don't. I just don't particularly, do things like that and say, okay, when we cross over this. I mean, I do that, but it's not like my lifeblood. Okay. I'm a little bit more, I'm just lazy, to be honest with you. So this is what I use. These red and green dots, this tells me when the chart is bullish. The white line is a T line. You guys, most of you already have heard this. This is all old stuff. But I got to tell you, it's the repetition. You got to keep going with it. And one day, one thing will click, then another thing will click, then another thing will click. So, needless to say, half the trading world, maybe even more, is super bearish. And the other portion, which I think is less than half, is bullish and very timid bullish, I think. Timid at best, but they're bullish. And maybe the best thing is not to be one way or the other. Just follow the trend. I can't stress this enough. Look at that. Look at the simplicity of that right there. When it's red, don't be long. When it's green, don't be short. Now, there's always this space in the middle, right in here, that, oh man, we better get long. Well, you got to be careful because there are some things that need to happen for follow through. such as, see, we popped up here, but you know what we don't have is we don't have a test and a breakout. So it's these little things that we learn in here, little things that we learn that give us that edge to trade. So, as we look at some charts tonight, keep in mind that actually, if you look at the SPY on the daily, we are very bullish based on this right here. Now, I'm not knocking the fact that we might be approaching a double top, or we were at a double top. I'm not trying to make fun of that. I'm not trying to make light of that. All I'm trying to do is say, look at the trend. Double tops, resistance, it just doesn't matter when it comes to the trend. Price action, candlesticks will tell us when there's a problem or when to back off the gas pedal a little bit, maybe tap the brakes a little bit. So if we look at the SPY here, we're still bullish. If you look at the diamonds, we're still bullish. Now you can just see by the white line, and this is the T line, the 8 exponential moving average. So it's not nearly as choppy as price is. And you can just look at that line and tell the price has just been all over the place. It really has. And we'll look at it with price on there. But you can't deny the trend. You can draw lines to your blue in the face, but you can't come up with anything other than a trend. IWM, the trend. You can't come up with anything other than that. We can come over here and we can look at this and say, well, we're approaching a double top. Okay, goody gumdrops. Now we know we just learned something. We know something. But something I say all the time in the trading room is, thank goodness we break out of double tops, otherwise we would have no stock market. That sounds insane to say, but think about it. It's the truth. It's the truth. Take the Qs here. Look at the Qs. Now, are we way up here? No. Do we have tons and tons of little levels, resistance to get through? Oh my goodness. We have tons of it. But this is how it starts. If you come back over, let's go to a weekly chart. There we go. If you come over to a weekly chart and you go back here to, 2001, 2002, this is what happened. Here we are in a downtrend, and look how it changed. And when it changed right here, weren't we still below these highs? So some things take time to get up there. Some things take time. So, all this, I'm just trying to figure out different ways, to talk about the trend and how important it is. And don't give up on the trend. Don't give up. I'm going to come over here to the chart, and I'm going to turn this off. There we go. All right, so here on the Qs, for instance, we had a pretty ugly day. And I know people that got all kinds of short here. I get that with some of the overhang of news and everything going on. I get that, rate hikes and all that. But we need that confirmation. I'm very fortunate to get to talk to a lot of people, and rushing into things just because we have an ugly couple of candles, to get short. The reality is the trend is still bullish. It is still very much bullish. So we shouldn't rush into that too quick. I'm very aware, let's just move this down, that we are approaching an area, I was looking at this on the SPY. In fact, I've even got it marked. These candles are the same on the SPY or the diamonds. You can see the trend is still up. And I'm very aware, if we come over here, this is going to be a spot that we're going to need to get through. I think this is important. This 119 and change and 421 and change. I think this is going to be extremely important to get through. So because I know that, I'm not going to run out and get short on the SPY, because that logic there, you could use that same logic right through here and you would have been burned on it. You could use that same logic right through here. Oh man, it's going to be hard to get back up over that evening star. Wow. Well, if you shorted, you got burned. And notice that evening star, we're actually still trending. Now we popped below it. We did do that with a doji, and everybody knows doji is indecision. You know, if you think of the candlesticks as votes, and 100 voters, 100 voters, because I can't get my mind around 88 million shares being traded. So let's just use 100. 100% of the votes voted this down. And in the morning, when we opened up, 100% gapped it down. If it would have been 50-50, we would have never gapped down. But 100% gaps it down. And then all of a sudden, where did all our voters go? What happened to them? That's because they're over here politicking to get new votes somewhere. And look what happened. So sometimes we're in such a hurry to short because of the current conditions, make that bigger, current conditions, that we jump the gun and then we immediately turn around and it's like, darn it, burned again. So I focus on the trend. When the trend is trending, trade the trend. Anyway, I'm sorry to keep going on about that. Let's look at a couple today. And if you have any questions about the trend or anything I can help with, please let me know. Was it Apple? Yeah. We bought some Apple today. And congrats for anybody that bought it early and you're in it. I think that's fantastic. Bought some Apple today. I'm looking at about 157.55, 160.20 up here, 162.95 as targets. Here's what I see in Apple. And by the way, you know, when you're looking at charts and if it turns out you're wrong, you know, let's just say for the sake of argument here, Apple pops up and still holding it. The market closes, and then all of a sudden the next day it gaps up. You think you're the best trader in the world, and we end up like this. And maybe we go ahead and move down like that. You know, if you're wrong, that's okay. That's part of trading. It really is okay. And you just have to be able to switch the game a little bit, and you've got to be willing to say you're wrong and step out of the trade. So with that said, let's get rid of that. So what I see in Apple right now is we've got this J-hook type setup. Here, let me move over here. Yeah, let's do that. We've got this J-hook. Where's my pin? There we go. So where we come up like this, and it's just a simple pullback. My absolute favorite is when we do that, and that's just what we've done there. That's the same thing, except we get this J looking. It's the same thing. Thunderbolt, J, same thing. So we've got this J hook setting up. We also have, I could make an ascending triangle argument here, like that right there, ascending triangle there. You know, I see some higher upside on Apple. And, you know, who's to say that it can't run up here? Of course, that's not what I'm looking for. What I'm looking for is something pretty simple. You know, I'm looking for it to go to 157 and change, 160. Just a simple trade. Let's see, we bought contracts on it, options. And we bought the April 145s on this. And we're just looking for that, simple move up. And I mean, those that trade options, that, we're at 4.5% up here, say that middle line. That's hardly anything to write home about, except if it's an option. And then, man, that is something to write home about, actually. Maybe even call home. That's pretty good money in this. So, and if it doesn't work out, it's real simple. Where would you not like the chart? Where would you not like it? So to kind of, I don't mean to step backwards on what I just talked about on the trend, but where would you look to short this? Maybe that's a question to ask. And a lot of people are in a hurry to short these days. Not that I would short it below that line, but a lot of folks would. Well, that's where you'd want to get out of it then. Where you wouldn't be happy with the chart is what it amounts to. Hey, KG, that is a good chart. Even the quad lines are positive. Maybe, I don't know. Do you mean the quadrant lines like that? Is that what you're doing? Yeah. Yeah, I use those, but I don't use them. I made my own. Much as I tried, because I love this. The thing about it with quad lines, when you say, dang, the chart looks good, even the quad is lined up positive. I'm not sure what you're saying about that, because when you put quad lines on, there's always a positive and always a negative. 100% of the time. So, above the, okay, there you go. You're right. You are absolutely right. So since you mentioned that, KG's sort of the same as fib line. These are not fib lines. These dotted lines are not fib lines. But you're right. It's above the 50% mark, which is right here at 152 and about 152. So once we get above that line, I get kind of excited. About that. And I like that mark. And actually, I just lied to you. The 50% line is right here. Sorry about that. Kind of lied to you on that one. This area right here, let me do this. Right between here, this is kind of that bottoming. That's where we want to see a bottom get created. Just like this down here. That's exactly what we're looking for. We're just going to do it up here. So we get that bottom created, and then we can start moving up. When it does get above, I should make that darker color, that 50% line, that's when I get real excited on a chart, especially if I can pick it up below that and we start coming up. Anyway, I hope that makes a little sense. Let's go look at crowd. Anyway, thank you, KG. Thanks. Sorry I didn't understand what you first was saying there. Crowd is another one that we bought today. So when you look at crowd, there's a lot of reasons not to buy crowd. Well, I shouldn't say that. There's not a lot. The price action is questionable. Sure, a lot of sellers in there, a lot of buyers too. But if we take this chart to a 2-day chart, well, first of all, on the daily chart, this is a rounded bottom breakout. This is, absolutely one of my favorite strategies right here is this rounded bottom breakout. So on the daily, it's that. And on the daily chart, the price action is a little bit wacko. And sometimes that happens, charts get wacko. This is the reason I don't follow a 5-minute chart, is because I think price is wacko. Just absolutely, it's wacko to me. So I don't ever go there. Everything I do is pretty much off the daily, pretty much, I say. So if you take this to a 2-day chart, look how it starts to straighten that out. Look how price starts to flatten out. In fact, if you take a look at that price, look how we broke out and now we're starting to flag. That's nice, I think. Now let's go to a 3-day chart or 4-day chart. 3-day chart. I think that's 3-day chart. 2-day chart. That's a 2-day. There's a 3-day. See how we're really flagging right now, or we get this box here going on right here. See how that tight box right there? And then you can see how we popped up, and here we are inside that box, or that circle in this case. So we're pretty, I mean, this is, this chart pattern, this pullback, and then we're looking for the bullishness. Well, the same pattern, it's the same pattern where you're up and you go sideways and you're looking for bullishness. Nothing changes. It's just a pause. When we get a little pullback, that's just a pause is all that is. That's opportunity. This is opportunity. And that's just what we've got going on here. Excuse me. So I bought on the daily chart. So let's go back to that. To make any money on this, there's no doubt it's going to have to break out here. There's no doubt. And there's nothing wrong at all with waiting for a breakout and a pullback. As I look at this chart, it is a round bottom breakout. There it is. And round bottom breakout has everything to do with the 50 and the 200. And our whole trading range for this particular strategy is to the 200. So we're talking in the neighborhood of 32% just on the stock. Holy cow. That's massive. That's huge. So anyway, we saw the chart. It was sort of a game that another person and I play sometimes. And I wouldn't call it a challenge. It's just a I will if you will kind of thing. Show me yours, I'll show you mine sort of thing. So we bought this, and we're looking for that to move up. Right now, I see 117.80, 123.90 as targets. We'll worry about the rest of the targets when they move up, as it moves up. That 135 would be a good target as well. That would be a very good target on that. So I hope that makes sense to everybody. And we bought the March 105 strike calls on this, March 105. Let's see, Tesla. Yeah, doggone it. I've been watching Tesla, and I watching this pullback right here, and I was just waiting. Well, today I had to go to the doctor's, one of those doctor visit things, and I couldn't be in front of my computer. Just totally missed that. So, doggone it, what a nice chart. That's just a nice chart. That's all I can say. That's okay. I'm not worried. We have the tools that will alert us, the scanner that will alert when we're set up again. And we're coming up to the 200 period moving average right here. That's the red line. So more than likely there's going to be a little pause right in here, and that might offer an entry on there. That might offer an entry. So anyway, I still like Tesla. I think it's a buy. You just gotta wait for that right time when it's sort of set up for you, and everybody might have a little different view of when that is. So yeah, let's see. I'm going to jump down here to Malcolm real quick, and I'll come back up, okay? Because Malcolm, he posted Tesla, and he posted. So you missed Tesla because you weren't in front of it. Why not jump in later the day? The biggest reason is we're approaching that 200 up there. So I figure I'm going to get an opportunity. We also have a little bit of resistance in here. So what I'm kind of seeing is, okay, we pop up. I see no reason why we can't go higher. It certainly looks bullish to me. So we come up and then we start bouncing around. Well, we're at this resistance place. I figure I'm going to get another chance to buy it. And if I bought it late in the day, let's just say right there, 8%, that's probably well worth the money. But I have to look at where the market is and where the market might be headed. And we already looked at the SPY approaching some of that resistance. So I just want to be a little careful. Also, there's another one. Somebody remind me FedEx to look at, okay? Because a similar question was asked of me today. And FedEx is the one that was asked about. Is, a person can only be in so many trades. Person can only be in so many trades. And I kind of ran out of my comfort zone this afternoon because we did buy the Apple and Crowd this afternoon. I did choose those to buy. So just kind of ran out of room there. Let's see. I had to go to the doctor today. Missed it. Oh, yeah. Those things happen, don't they, Carol? Oh, let's see. Braden. Wait a minute. Wait. Greg. What minute do you follow? I follow the daily, Greg. That's my chart of choice. That's my number one chart. From there, the 3-bar chart, hourly, 15-minute. Those are charts I look at. But the daily is, the daily is where I trade from. Let's see. Is RAD an RBB? Yes, it is. Yes, it is. It became one today. That's actually a very nice chart. I'm going to flag that. Wins earnings. Yeah. Earnings is in April. That's a super nice chart. Look how this is bottomed out here. Don't worry about this. I apologize. Don't worry about, this and don't try to analyze everything under the sun. Don't do that. Just, there's a bottom. Be happy with that. Now, this is where the trade starts, in my opinion. And we get the support of the 50-period moving average. We don't have the T-line or the trend indicator above it yet. But even if we waited for that, what are we talking here? My first target's going to be in the neighborhood of that dotted red line there. That's 18% away. So that's a super chart. Thank you very much for that. So here's what I would look for there is, the first thing I'm going to do is this right here. This little tool, kind of one of those, kind of a made up tool, I guess. And I would be tickled pink. I mean, I would be just excited to no end if we could just get back to $6.50. I don't care about $17. I don't care about $50. I don't even care about this high. I just care about $6.50 right now. And I care about everything in between. That's probably more what I care about. So you see how we're just building a bottom, and it's very tradable. Don't get me wrong. I'm not saying it's not tradable. It is. But this is that bottom right there. So we start to get over that bottom. What that does is it creates another layer of positive trading. The more positive trading you can have, the more likely the chart's going to move up higher. So this just creates a positive, outlook for the chart here. So this is, above that 50-period moving average is what I personally would look at. And that neighborhood, listen, can you guys even see that? I don't know why they're coming so small here lately. Here we go. Something like that right there. Beautiful chart. Excellent. I see me trading that one. Little $3, $4 chart here. Super. So right now, targets for me are going to be this, about 405. And then the second line up here, about 485, which we're talking the dotted deuce, and that's right on target. The other thing, I'm going to have to put a line right here at this top, and then we're just going to put one at the dotted deuce up here like that. And I'm going to put one right there. And let's just get rid of this mess on the chart. And that cleans the chart up really nice. And I think that's some great targets up there. I'm going to move this up because anything below the 50-period moving average, I'll be very, very unhappy. Very unhappy. There we go. Now we're back. So anyway, thank you for that chart. I hope that was helpful, Braden, there. Let's see. Where are we here? Matt. A stop loss exit on Apple and Crowd. Add more options on what could seem to be another pullback. You know, Matt, I can't tell you what's good for you. Okay? I can't do that. I don't know your trading. I don't know, what your risk tolerance is. I mean, we should look at Amazon in a second too. If somebody will remind me to look at Amazon, and I'll kind of go that might also explain a little something in here. But I don't know. When you say, a stop loss, I mean, I can give you maybe what my stop loss is. Not that I'm going to adhere to it 100%, and you'll see what I mean on Amazon. But adding more if it pulls back, you got to be careful because I think every time we trade, I think we should look at more than just the trade. All right. So there's Apple. These are three things that I look at, and there's actually a fourth. And the fourth is going to be this right here. Now, I'm just going to write it right here because I don't have it on the chart. So the SPY. And this just is the market, is what this is. So when I look at a trade on whether to buy it or to keep it, add more if it pulls back, things like that, I'm going to look at a few things like the SPY, and then I'm going to look at the chart, and then I'm going to look at this chart, and then I'm going to look at this chart. So for me, just to blindly say buy on a pullback, I can't do that because I don't know what this chart's going to be doing, and this chart means a lot to me. And I watch UVXY an awful lot, so I can't say that it will be an add to. And the same would go for Crowd. Now, if you are like one of those, you're a very bullish individual on the market, and if we pull back, well, you might have, some area, maybe any pullback to the 200 might be a buy for you. Just be careful because, well, what if we pull back here? Are you going to keep adding to it? Well, what if we pull back here? You're going to add to it. At some point, you've got to decide, what is it? What are your goals with Apple? So if you're going to buy Apple for 4 years down the road, every time you get some spare money, just buy some. Seriously. But if you're a trader, you really have to be careful on adding, because what if the market starts to let loose, and then you've come down here, you've bought Apple, it's moved down. Let's see. So you bought Apple, it came down, you bought some more. And then what happens if the market breaks loose? Now what are you going to do? You're into Apple so deep. What are you going to do? And that's the problem with just, I can't say blindly add to it. I hope that makes sense. I hope that helps. So since I was talking about this, Amazon, there's Amazon. I've been holding Amazon. I bought Amazon up here, or right here, this hammer, and I held Amazon on this pullback. I did add to Amazon down here. But see, you've got to be careful, because what if the market lets loose? All of a sudden, you're a little too deep into a chart, and you no longer own it. It owns you, and that could create a problem with adding to it. Look, I do it all the time, but I know me, and I know my limits. And if you know your limits, then you've got to you can have a plan for that. I hope. Sorry, that was probably a lot longer than I should have even talked about that. I hope it helped. Let's see. Do you think Tesla will stop at 200? I don't have. I mean, you mean like at $200 here? 200? 200? Oh, at the 200. I see what you're saying now. Stop at the 200. I think there'll be a pause there. Yeah, some sort of a pause. Stop and crash and burn. I can't predict that. I can only follow the chart. But some sort of a pause. Yeah, I'm not worried about that. I'm not worried about that at all. Even if Tesla broke out, just boom, I'm not worried because there'll be a pullback. And that's what I trade. I trade the pullback and the rallies like that. So, but I suspect there'll be some sort of a relaxation, some pullback. Let's see, Chris. Yes. Let's see. Baseball. Deepak. Is you a rounded bottom breakout? No, it's not. And let's come over here. Yeah, this is not a rounded bottom breakout. Look over here. That's a rounded bottom breakout. Okay, that's a rounded bottom breakout. Where we move over the 50 and then to 200 is our target. It doesn't matter that it doesn't get there. It doesn't matter at all. We're just looking at that space between the 50 and the 200. So here's your rounded bottom breakout. Actually, back here was your first day, and then it went up. All this is considered a rounded bottom breakout right there. This would be a rounded bottom breakout. But right now, no, it's not. Still a bullish chart, but not a rounded bottom breakout. Okay, and the second part of your question, is it good for a long setup? It's in a trend. Is it good for a long setup? Yes, it is. You know, the easiest thing in the world is just look at the trend first. So, is you set up for a long? Yes, it is. Any chart that's in a trend, long, up, is set up for a trend or for a long trade. Any and all trades. Any and all trades that are trending down are set up for a short trade. Simple as that. Now what happens, let's get rid of those. Now what happens, it's our job to find the entries. That's our job. Right here, anybody that can create a chart that is simplistic like this, no candles. Do not put candles on there. Don't put any kind of price action. Just so you can look at the chart and make that initial claim, like that's bullish. This is hands down bullish. There are no ifs, ands, or buts to it. This is bullish because of that trend. Now our job is to find that entry. So as we look at this chart, one thing we want to ask ourselves is, where do we think it can go? Always ask yourself that question. Can we go back up here? I don't see why not. I think we can. Now, let's look at this. See where we have these tops? So, and I'm not trying to discourage from a buy right here. I just want to make sure that you're aware of them. So now let's do this. Let's just run a line up like that. Nice little trend up, right? So now, if you look at this chart, I'm pretty positive you'd be happy with $58 up here. Pretty positive. You start looking at this, is this worth your risk? And it's okay for the answer to be yes, even though I think horrible risk right now. It's just not my trade at this moment. But if somebody said, yeah, it's worth the risk to me. Well, you know what the trend is. It's bullish. So you're willing to take that entry. You're willing to take that risk, knowing that we have this top here. These two candles have topped out. As long as you can accept that, then cool. Otherwise, let's do this. If we just started right there and went up like that, would we be happy with 36% and don't even trade down here? I would be crazy happy. Crazy happy. So just by looking at a chart and looking at the risk factor based on you, because your risk factor and my risk factor are completely two different things. And that's okay. I mean, we're different peoples. So as long as you're willing to take that risk, sure. Anyway, I hope that was helpful. Kind of, maybe. Let's see, Matt, for you. I don't know what for you means, Matt. I'm trying to remember what our conversation is. I'm not sure which part of the conversation with that is. And sorry, I just don't remember which part of the conversation that would be. Let's see, PAA long. Absolutely. Nice chart. Beautiful chart. Wins earnings, May. So we've got plenty of time. Let's take a look at a weekly chart. Oh man, look at that. Look at that weekly chart here. That's beautiful. So look at this. Let's just move this down right there. Actually, I'm going to move that right there. No, I'm going to put that up there. Sorry, sometimes it takes me a second to make my mind up. So yeah, I'm going to put that right up there. Let's go back to the daily chart. That's a long way up there, but it's very doable. So what are we talking here? 40% or so? Now it's just a matter of trading the chart. We've broken out here. We've broken out there. Looks like we've broke out here. Now I think we need a little rest in this. I do. A little bit of a rest. I think that's a great looking chart myself. I think the biggest thing on this, let's just move this up for me, that it's going to have to close. It's going to have to stay over 1290 here. So a little bit of a rest. What a nice chart to trade. Beautiful. I think that's excellent. Let's see, took profits on NAT today. Congratulations. Super trade. I don't, if you got it somewhere in there, congratulations. Very nice trade. Let's see, is plug a 3/8 trap? Plug. No, it's not. Let's see. Plug long, is it a 3/8 trap? No, it's not a 3/8 trap. A 3/8 trap is really simple. It's all about the 8 exponential moving average, and it's all about the 3 exponential moving average. And then what we're looking for is price, we'll use green, price to be trapped between those two moving averages. And you can see here we're below the 8 exponential moving average. Okay, we're below the 8. So no, this is not a 3/8 trap. Is this still tradable? Sure. With anything below the 50 here, I would be really, really unhappy. Now, I have to tell you, I don't think much of that price action there. Okay, I don't think much of that. I'm not so interested in that myself because of that. Let's go look at this chart. Is that bullish? And no, it's not. So I'm going to say probably not the best chart today. Probably not the best chart today. Not until it turns bullish. And if we go back to this chart, if you look at all those candles, man, that's a lot of ouch in there. That's a lot of bee stings right there. So maybe what we should think about, I don't think plug is dead. I mean, I don't think anybody here thinks plug is dead. I think plug has a pretty darn good future. So why don't we just put that on a watch list? And why don't we just wait till it breaks out there and here? And the future here could be tremendous. All the way up to here. A tremendous future. And we don't have to mess with this. Don't get me wrong. Is it a buy there? It is if it is for you. Again, you know, Greg, Bill, Mike, myself, we're all different. Yoreen, is that how you pronounce it? Yoreen, I hope I didn't mess that up too much. So yeah, that's a buy for somebody. You can clearly see today's candle. It was a buy for somebody. But is it a buy for you? And that's the question you've got to ask yourself. Is it a buy for me? No. Nah, not right here. And Bill, how to use T2123? Simple. It's either bullish or it's not. There's no in-between to it. Let me put this on the 15-minute. I follow this on 2 different time frames. And not that I look at 2 different time frames at the same time. I just simply, I watch the 15-minute and then I watch the hourly. So let's just stick with the 15-minute for now. As long as we're bullish, we're bullish. If we're not, we're not. It's that simple. This is probably the coolest indicator I've ever seen, ever in my life. And I've seen a lot of indicators. This is just, it's just pretty cool. So see how we're red? Don't be bullish. See how we're green? Don't be bearish. That simple. Or be bullish in the market when we're green, be bearish in the market when we're red. I have proved this to myself because I had to, time after time after time. The hourly chart takes it just a little longer. So I watch this one, and when we're green, don't be bearish. Just don't be. And that's literally how I use it. It's super simple. It's either green or it's not. And this is just that 17 EMA. Nothing magical. It just fits my trading world is all. But yeah. Anybody that has TC2000, I think it's a cool tool. I have not heard of any other program that has it. I do believe some people have made it using Thinkorswim, but I don't have the code for it. Let's see, MRGM for a long. That can't be it. MRAM. There we go. Yes, indeed. Earnings. Earnings coming up. Keep that in mind. You know, I said yes, indeed, and I would like to take that back. Every ounce of it back. I am totally against trading charts that only trade 37,000 shares, 60,000, 40,000, 50,000, 40. I am totally 100% anti that. That's the worst thing for any trader, if you ask me. The worst thing. So, okay, now that I've ranted and raved about that, let's look at it. We've broken out. I think you're bullish. Look at this chart. Nice bullish trend, right? So let's go find some entries here. You can see here we rallied up, we pushed back, rallied up, couldn't get through, pushed back, we broke out. Okay, now we're getting somewhere. And I'm going to move this up here because it just looks better to me there. We want to see follow through. So I would look for that buy up in this area here, like this. I mean, it's a nice chart. There's no reason not to buy it other than I would never buy it. Just looking at the candlesticks, beautiful chart. In fact, I want to come talk about that. Let's move up a little bit. Let's rest a little bit for an entry. I think you've got a nice entry there. Targets, any one of those two highs right up there would make a great target. Now let's look at this chart a different way. A great candlestick pattern bullish is called a rising method. A rising method is when you have a bullish candle. You have, I'll come back to this, you have candles in the middle. I will come back to this. And then you break out here. And what you're breaking out of is this candle right over there. This one right here. Now, in a rising method, there's supposed to be, according to the books, but just move those aside, should be 3. So 1, 2, 3 candles. According to the books, this candle should have been right here. But are we seriously not going to look at that? I would call this a rising method. Beautiful chart. Just wouldn't trade it. Thanks, Greg. Let's see. Oh, you're welcome, Matt. Thank you very much. Appreciate it. Let's see here. SI. SI, I think, is one on my watch list here. Yeah. This is a watch list that we create during the day. During every day. And the stocks accumulate on that watch list. I go through and weed them out every couple weeks, maybe. In a perfect world, I should probably weed them out once a week. World's not perfect, so sometimes it takes me a minute to get to them. But SI is one of these set up on this rounded bottom breakout today. We were set up here, and then it pulled back, and now we're back over up there on that rounded bottom breakout. I think it's a pretty nice bottom down here. Look at the volume on this thing today. I think that's nearly a super chart. For the rounded bottom breakout strategy, the dotted deuce here is going to be a target. The 200 period moving average is going to be a target. Look, we know we're going to have targets along, well, between here and here. So we're going to simply do something like that. And, you know, I think we better just put a line right here at this top. Sorry, I'm starting to lose my voice. And then over here about 30 bucks. So I think that's a great looking chart myself. Wins earnings in April, so we have plenty of time to get there to meet one of those targets and make some money. Beautiful chart. Anything below the 50 wouldn't be interested in it at all. So thank you very much. Nice chart. Thank you, Urich and Deepak. Thank you very much. Jake, black line equals Glinda. What is the dotted line? Black line. That's all right. Now I see underneath there. Okay. Yeah, the black line, this black line, that's the T line, the 8 exponential moving average. And the dotted line, is the what we call the dotted deuce. That's the 200 period moving average. It's front weighted, and it's measured on the lows. So if you, here you can take a screenshot of this or write it down. It's a 200 period moving average. It's the average type is front weighted, and it's the average of the lows opposed to the close. Yeah. So if you need that again, let me know. I can put that back up. And then when you say red and green, you must mean the red and green dots. That's nothing more than the 17 exponential moving average. Simple as that. We just figured out a clever way to make it red or green. For instance, look at SI. Nowhere is that a buy until about now. See, all red. No reason to buy it till about now. Let's see here, Deepak. I would wait for a pullback. Sorry, I don't know which one we're talking about, Deepak. STX. Nice chart. Earnings in April. I get trained about halfway through earnings season to check the earnings. Here pretty quick, I'll forget about it, and it'll take me another week during next earnings before I remember to look at them. Sorry, to get a drink of water. I think this is bullish. Your biggest obstacle and headache is going to be right through this level right here, getting up. But man, if we never looked at stuff like this, I think we would almost be better off. If all we could do is see this chart, that's it right there, I think we'd be better off. It's pretty simple. Pretty simple. If I was to be long this, say today, I wouldn't want this to come back through 69.40. Nobody would. So I wouldn't be in it. I'd get out of it. On the other hand, that's looking pretty cool. We start to break out, which started today, and I'm going to use this candle body here. Man, let's just trade that chart. And, like I said, if we could never see resistance over here, I think that would be actually a plus in most cases. So we're bullish. And then, you have a little pullback. So what? I mean, good grief. Look at all the, dark candles or, candles that might not make you happy, and look where this has gone. So what if we did come back here? And what if we kept going? I mean, beautiful chart. Super, I think. Very nice. Very nice. Long at, let's see, 72.30. Yeah, I totally agree, Moto. Yeah, very much so. Very much so agree. Nice trade. Hey, Ed, thank you very much. Let's see, Bill. The red and green dots, are they volatility stop? No, they're not. What they are is they are the volatility stop tool, but they're coded to 1010, and then we're using the 17 EMA as the data source. That's how we get the red and green dots. But all it is a 17. I mean, I can come over here and let me turn the 17 on. There it is right there. It's just the 17 exponential moving average. That's all it is. And we just figured out a clever way to make the red green is all. Let's see here. Braden, our edit. Let's see. Edit. There we go. Whoops. Edit. There we go. Edit. Yeah, that's a rounded bottom breakout. Rolled up over the 50, hit the dotted deuce, fell right back. Here's the 50. That's a rounded bottom breakout there. Yes, it is. I love this strategy. I really do. Here's the question, though. Is that a buy for you? That's the question. That rounded bottom breakout is just here it is. It just can't get any tougher than this, or easier rather. There's the 200 period moving average. Here's the 50 period moving average. You need at least 10% between the two. So that's a rounded bottom breakout. Every time it will be a rounded bottom breakout. The question, is that a buy? And that is the $64,000 question. And to me, the answer is no. But that's not to say that in a day or 2 days or 3 days, it won't be a buy. So that's the big question right there on this, Braden, is that a buy? For you, it might be. For me, it's not. Take a look at Zim. I like Zim a little bit better. Yes, that's a rounded bottom breakout. I do like that a little bit better than the other one. But again, I don't believe that's a buy right here. We'll talk about this one a little bit more because I think you have a little more potential here. We start moving above the previous candle, that becomes a buy. Okay. Another way that I will look at this, because this one fits the bill, is I'm going to take this body top and we're going to come down to that low, and I'm right there. We're over that 50% mark, and that's where I think the buy is. This is the accumulation area. Now, if you're all into that, you want to be part of that accumulation, you can accumulate all you want down here. The thing of it is, until we take out this candle here, take out that resistance right through there, you got nothing. You got absolutely nothing. Beautiful chart, by the way. Don't get me wrong. Absolutely gorgeous bottom in this. Gorgeous bottom. And you can see Zim over here. That's on our watch list as well. That's a nice chart. Let's see. What time frame of the T21 to 20 do you look at? 15-minute and hourly. Yeah. 15-minute and hourly. Let's see, 21, 23, follow-up question. You look at it for entries? No. Or just a barometer of the market mood at the moment? Yes. That's a great way to put it, Bill. Maybe if you were going to get in or out, just evaluating a position. All right, here's what I'm gonna look at. Number one, I think it's very important for a trader to make a conscious effort to admit and to accept and to succumb to that. And what I mean is, just because you have a monitor or a keyboard, you don't have to trade. You have to learn that, I think. This is what I do, okay? So when this is bullish, I tend to be more involved with the market, bullishly. When this is bearish, I tend to have less positions because I know where my strengths are. My strengths are to the long side. I know that. I've accepted that. I've become one with that. I have succumbed to that. So when this thing turns negative, I start backing out of the market. Period. Now, I might look for shorts, but if everything is going long, this is looking good, and UVXY is looking good, and I'll explain that, Lee, then I might have, I don't know, here lately, 6, maybe 7 positions in the market. If this turns negative and UVXY starts climbing, I might have some shorts on, but I only might have 3 positions on. So I know my weaknesses. I know my strengths. I accept that. I accept that I can go 2 days or 3 days or a week without trading. It's hard. I gain weight, but I accept that. So how do I follow this? Really simple. When it's bullish, and when it's not, it's not. And I mean the whole market. I'm going to move this to a daily, not because I use the daily. I don't. I mean, I do not, because it does not fit my time horizon, not even remotely close. But just take a look at that. When it's green, I'm bullish. This is just a better picture than the hourly is all it is. When I'm green, I'm heavy in the market. When I'm red here, I am not heavy, but I'm not necessarily in cash. I'm heavy. I'm not heavy. I'm heavy. Okay? So I use it like a barometer, but I use it as the market is bullish, period. When it's red, the market is bearish, period. And again, you have to know where your strengths and weaknesses are. Okay? That's how it helps me. As far as UVXY goes, if I see this moving down, say on a 15-minute, and that's what I'm going to be watching. If I see this moving down and UVXY is climbing, that's a clue. Now, we may not have turned red here. We may not be below that. But if you, and I see this all the time, we're still holding up, but UVXY is climbing, I'm getting nervous. So I start, making myself, okay, calm down. You don't need to buy everything under the sun. Let your foot off the gas, tap the brakes a little bit, be prepared to shift gears. That's how I use UVXY. If UVXY stays to the bearish side, to the downside, and you put a candle in like this right here, I don't get too excited over that. Long as this stays down. If this still shows underwater, then I'm still okay with this until this is not okay. Does that make sense there, Bill? And the daily is the best. I mean, just because you can see it. Bullish, bearish. And if you go back through your records a little bit, and if you've made money, whoops, not what I wanted. If you've made money, you can use these as days or weeks, months for that matter. Probably, I would stick with days or weeks. If you've made money, go back and look and see what this thing has done if you have the ability to look at it. If you have lost money, go back and look and see what this thing has done. And I'll bet you dollars to donuts that while you were losing money, we were underwater. I'll bet you dollars to donuts that that's the case. And I'll bet you when you've been making money, this thing has been up. Yes, sir. And again, I'm only using the daily because we can clearly see it. The 15-minute, it is kind of hard to see. But I'm not looking at it, as a big picture thing during the day. Okay. Let's see. I did UVXY. I hope that was helpful, Lee. Thank you. CCJ long. If it can break out, but not until then. We've got a nice trend. I've looked at this today. Very nice trend. I love the trend. So because of the trend, it's bullish. No question in my mind. And I will remain bullish, that attitude with this, until it's not. But it doesn't always mean that there's an entry there. I mean, it's a pullback, yeah. Probably a 3/8 trap here, yeah, probably. But as I look at this chart, I see these tops and they're real wicky. That tells me a little something. That gives me a little clue. That clue is maybe be patient. Let's wait until it breaks out. Let's wait until it breaks out. Another thing is when you see things like this, make sure you look at the rest of the chart. You see how we're stuffed right up into this resistance area. Now, I'm not afraid of resistance. I see no reason why it can't break out, but I'm not going to bet my money on a chart with those wicks up there like that. And it doesn't matter what's on the left over here. So I like this chart. I do. I am bullish on this chart. I'm not convinced that this is the entry. I would be more inclined to be a breakout, for it to be a breakout entry. Please remind me what the dotted deuce is. The 200 period moving average. Let's see. We'll look at this again. 200 period moving average. The average type is front weighted opposed to simple or exponential. And it's the low opposed to last price or closing price. Sometimes some programs are set up on closing price. So it's low. That's all it is. Let's see here. Take care, Ed. Night. Sleep well tonight. OCUL, high volume, gunslinger chart for Watchlist. Yeah, for gunslingers out there. Yeah, but nothing changes. Let's wait for a pullback on it. I mean, overall, it's a nice chart. Not for everybody. We need to get through this top, and we probably need a pullback for an entry. But yeah, you're right. Let's see, what's the volume look like? Volume's okay. I'll flag that. We'll try to keep an eye on it. But yeah, needs a pullback, I think, for an entry. Let's see here, Rick. Thanks. Thank you, Greg. Appreciate it. Murrah, Zim, cup and handle, Zim. Yeah, actually a gorgeous cup and handle setting up. Beautiful, 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 beautiful chart. Beautiful chart. And like I say, I've got that on my watch list here for a buy. Hey, thanks, Julie. Good night. Zim, wow. DocuSign. See, what time is it? Maybe somebody could draw me a line down there. I would really appreciate it. So, DocuSign. Let's start over here. Bullish chart. We're still very green. The reason it got red here is because price dropped below that. That's why it got red here. But the T line's above. So I'm okay with that. And then we got back green here because price is back above it. Nice chart. I'm bullish on the chart. But I question the entry. See how we gapped up and then just meandered sideways, and see how we gapped down. That makes me a little nervous. Let me grab a drink of water. Okay. I think everybody in the world that has written a candlestick book, my hat's off to you. I've read more than I could possibly think of. I've got more money tied up in candlestick books you can shake a stick at. And every one of them is exactly the same. I mean, no disrespect, nothing against that. I mean absolutely no disrespect at all. I think they're all fantastic. And in every single one of them, that's a bullish engulf. In every single one of them, whoops. That's a morning star. Every single one of them. They all look alike. Well, here's where I disagree with all the books. This right here, here we'll do this. How can I do this? Let me think about this. Let's just put a line right here. I'm going to put a line right there. In every single candlestick book, if this candle was above that line, if that candle was above, and if that candle was above, and if that candle didn't touch that line, that would be an island reversal. Please, Lord, tell me the difference if those candles cross in to those candles. Please share with me what the difference is. And there's none. There is no way there's a difference. But that's what the books say. Now, I want to defend the books one more time. You can only have so many pages in a book. You can only spend so much time writing it. So it is impossible for the book writers to put every little nuance in there. It is absolutely impossible. I get that. I respect everybody that's written a book. And I've read a lot of them. But that right there, to me, I'm smelling danger right here. So I'm bullish on the chart because the trend is still the trend. But now, if we're gonna to buy this, it has to overcome the danger. So one way to overcome the danger is just flat go for a breakout. And I'll tell you what, I'd be happy with a breakout of 66.30. Breakout. And if it's going to break out, and it's going to break out with some health, it will go higher. If it's no health, it's just kind of a wimpy breakout and then sort of fails in here, you'll know the candle. You'll be able to see the market. You'll be able to see the candle or candlesticks. You'll be able to know it. Then you know it's not a healthy breakout. And then you'll be glad you didn't buy it. On the other hand, if it sets up, there's more upside. So, like I said, I looked at this today, and I see possible danger, and that makes me a little bit nervous. So, with all the charts out there that are looking really, really, really good, I'm not sure this is where I want to put my money for an entry, but I totally agree it's bullish until it's not. So I hope that was helpful there, Matt. Let's see. Thanks, Rick. I promise these are the last. You can ask until that line gets crossed. You can ask all the questions you want. That line that somebody drew me below. Let's see. RARLO. Okay. Here's what I'm going to do, Braden. I'm not going to answer every one of those questions. I'm going to answer this question, and I'm going to teach you what a 3/8 trap is. And then you tell me, are those 3/8 traps? Okay? I'm going to teach you what a 3/8 trap is. And anybody that's still here. All a 3/8 trap is, all it is, there's no fancy-pantsy anything in there. It's price between the 3 exponential moving average, below the 3, and above the 8. I use the high of the 3 exponential. Some people use the last price. I choose to use the high. Either one is fine. I do not believe one is any better than the other. I use the high because it casts a larger net, a wider net. That's the only reason why, okay? So, is this a 3/8 trap? Yes, it is. I'll let you answer the rest of them. So and let me give you another little helpful, little secret tip. You want it to be trending right here. So you want that trend, you want it up, and you want to pull back. That's a 3/8 trap. Okay? So now you know what a 3/8 trap is. Let's see. I bought UBS. Nice. Very nice. Wins earnings. I want to draw a line right here. Nice breakout. As long as we stay broken out, I think that's 2 thumbs up, man. Let's see, UBS, mainly a long-term. Yeah, that's nice. Look at the weekly. Holy moly. I'm going to flag that chart. Who put that chart up there? Moto. Thank you very much. See this top we've got it? I need to get rid of this. Let me get rid of this right here. See that top right there? We get above that. We start to break out. What a super chart. The long-term potential here, I think is truly, truly nice. So let's, should have done it over here. There we go. The long-term potential, there it is, of this. Let's just fill that gap, that's all. 350%. Can you imagine just getting a piece of that action? Just a piece of it. Nice. That's a beautiful chart. Thanks, Moto. Put that on my list of banks. Let's see here. Is there, Jack, I don't know if there's a study on TOS for T2123. I don't know. I don't use Thinkorswim, so I don't know if there is. I think I saw somebody here the other day say they've created one, but I don't have the link, or I'd give it to you. I don't have the code. I'd give it to you. Let's see, VTI compared to T2123. No, it's not. The VTI is just it's like the SPY or the diamonds, but it's just the total. The total stock market. That's all it is. If you look at the SPY and VTI, they're the same thing. I mean, they're identical. It's not going to tell you anything. What the T2123 tells you is if overall the market has a tailwind or a headwind, is what it does. So is overall, is everything rising or is everything falling? And it does it before, it will do it before VTI tells you, before the SPY tells you. Let's see. Thanks, Vin. Oh, you're welcome, Bill. Thank you. Let's see. FNV. Is that FNV? Yeah. FNV long. That'd be a no. That'd be a no. Okay. All right. Let's talk about this, okay? I had to get another drink of water. So the question is FNV long? No, because it doesn't mean that this is the bottom. It could. I'm saying the answer is no, because in my world the trend is still down. So no, it's not long. But in somebody else's world, maybe somebody sees something in here I don't particularly see. Maybe somebody looks at this and says, you know what, we've hit some support here. It's going to reverse here. And they could absolutely be right. I can't tell you that. And truthfully, bottom picking just doesn't work out for most folks. It just doesn't. So to me, no. For this to be long, number one, there's just some chart rules that I think need to be followed. If this is going to be a low, okay, fine. We need to have a high. We need to have a pullback for a test. It can even be a double bottom. And then we need to break out of wherever the high is. And I'm not saying it's going to be right there. Once that happens, then this becomes the tradable bottom. At bare minimum, we need this. So all I see is a chart that's downtrending. That's all I see. And all this candle is, it's like a swimmer in the ocean that's about to drown, and they're gasping for air. That's all I see here. And until the boat pulls up and throws that swimmer a life vest, and that life vest would be, to me, no less than 139.25. So anyway, another way to look at the chart, if we is it bullish? No. Take a look at the whole top. That's not bullish. Now let's play I'm sorry, yeah, that's not bullish. That's bearish. Now let's play the other side of this, okay? Is this right here bullish? Yes, it is. All that, very bullish. So what we've got here is an argument happening through here. Who's going to win that argument right there? Sorry, it was kind of messy. Who's going to win this argument in here? The bulls or the bears? So no, I don't think it's bullish. Not right now. Thanks, Emma. You see what Emma just posted there? Hey, Emma, I can't copy that right now. Tomorrow, would you mind sharing that in the room? If you wouldn't mind to me, where I have time to copy that, I would appreciate that. Thank you. Let's see, PLTR. PLTR, bullish, yes, 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 and yes. PLTR looks really good here. Let's get rid of that for now. PLTR looks very good. I don't, you want to make sure it settles down for a buy, I think. Nice gap up. Careful not to be chasing it. So right now I see no reason why PLTR can't run up to this 1160. But we don't want to chase, so let it relax a little bit, I think. That would be the thing to do, for me anyway. Take the weekly chart here. What a super, super weekly chart. Absolutely super. Rounded bottom breakout on the weekly. Weekly. There we go. Well, I guess it's not been in business long enough to have a 200 up there for TC 2000. So you can still do it. You don't need the 200. I'm going to go over here. I'm going to change my top. Actually, I'm going to put a second one up right in there. What a nice chart. So what happens now is said Bob there. Thanks, Bob. Bob says PLTR bullish question mark, right? Yes. The real question is, how do you buy it? That's the real question. And see, that's where trading comes in. That's the tough part of trading. Not, is it bullish? It is bullish. Of course it's bullish. And Bob, I'm not trying to pick on you, but you knew that when you asked the question. The real question is, where do you buy it? That's the real question. Now, for me, I can't tell you, is the buy 853? Or here's something, and I told everybody in the room this the other day. Years ago, I would hear people say, PLTR is a buy above $9.22. And I never knew what that meant. I never knew what that meant. Because every time learning from people, I would, follow them, okay, I would lose money. Because what I didn't know is that this is what charts do. Sure, it might break out, and then it comes back, because that's what charts do. So this is where FOMO comes in, fear of missing out. Let's be patient. Let's be patient on this. If you think it can go to 1440, and I absolutely think it can, then come in here, make yourself feel good, and put this in there. That's 51%. That makes you feel good. Don't let it trick you into feeling greedy. That should make you feel good. And what it should do is say, okay, I have time. Be patient. Yes, that's a bullish chart. But be patient. Wait for the right entry. A gap up, a chart that's up almost 21% in one day, that needs some thought for an entry. Okay? So, a couple of things I'm going to do. One, if it wants to break out, all right, I will guarantee you the best cheeseburger wherever you live, that if it breaks out, it will pull back. I'll bet you the best cheeseburger wherever you live. Add bacon on there if you want. I'll take that bet. And what this will do will give me an opportunity to buy it. I'm still looking at 50%. The second option is if it pulls back from here. And if it pulls back, find support, who knows where, who cares? Seriously, who cares where support is? It pulls back and it starts to put in some bullishness. Creates that bottom. Remember, we have 50% here to work with. Let it create a nice little bottom and then walk into it. So the question is not if it's bullish. The question is, where do you buy it at? Here's something I guarantee you, this is what I'm going to do. I'm going to come over here and take this cool little tool that I've created, and I'm going to take that 50% mark, and I'm not going to get sucked into it. I'm going to wait till we get closer to that line right there. But again, what if it doesn't get to that line? That's okay. I'll play that same game right up here. Same game. I'll look for that entry up there. Everything in the middle, all the chasers, go, let all the young bucks go in there, beat the snot out of each other if they want. Us old farts, let's play this smart. Anyway, that's my way of looking at it, Bob. Hope that was helpful. Aloha. Good night. Hey, there's my line there. Thank you so much, Fred. Appreciate it. I'm getting tired. All right, everybody have a wonderful night. We'll see you tomorrow. Good trading. Keep an eye on this market. I'm still bullish, but I do think we're running into some questions here. Remember what I talked about in one of those charts? That kind of an island reversal sort of thing. That's kind of sort of what we have right here. So we need to overcome this. Otherwise, that just becomes a big resistance area. So let's keep an eye on that, okay? All right, you guys take care. Have a great night. Sleep well. Eat some pie. Later.